So before we get into today's trade opportunity, the first thing we have to do is check the economic calendar for the week. And as you can see, as you take a quick scroll through the week ahead, you can see that there's quite a bit of red hot important news coming out of America. Okay, and in conjunction with that, you have information coming out of the UK and actually Japan as well. So whenever you've got information, red hot information, and even if you take a look at like Monday, for example, okay, you've got we had three significant piece of data: core retail sales month on month, retail sales month on month, and the Fed chairman speaking as well. Okay, so we've got quite a bit of data coming out. Several days in a week back to back, which are all really significant, and these are all pieces of data that can have personal ramifications in regards to our trades. Okay, so this is probably one of the most interesting trade opportunities I've kind of scattered at looking at the markets. And when I look at this market, it actually looks quite primed right now, but it all starts for me with a higher time frame. Okay, so just from quick outset, you can see looking at the charts that price has been moving up. Okay, you can just easily see that in a number of ways. A quick way to identify it is look to the left, okay, and look to where price is right now, and you can see that price has been moving up. Okay, it's a quick, easy way you can, for those of you who don't know how to look at long-term charts and look at which way the market's going, that's a quick way and easy way for you to do it. Looking at this from an extremely long-term perspective, and then also looking at what price has been able to do recently, okay, coming off the back of this movement here, and then price has actually skyrocketed up. Okay, now as you look at it now, you can see that price for the last couple of days did sell off, but price is actually 3 days in a row, or let's say 2 days, and today so far, okay, price has found the bottom. So looking at this, as we go down now to lower time frames, you can see the bottom we're talking about is right here. Okay, and this is a really good view of what we just discussed. You can see that price kind of dropped off and it's kind of consolidated, but the place we want to focus on as we go down to the time frames is right here. Okay, because we've seen extremely long term, we've seen intermediate long term, that price is moving up. And as we go down now, 1 hour view gives you an even better view. You can see that, look, price has been consolidating. Although price rocketed down, probably based off some key fundamental data, okay, price bottomed out here. Okay, all of these lines are all adding up. Okay, so as we now go down to a more feasible kind of time frame for an intraday trader, we can see that this green area line down here is the bottom. Okay, this is the same area we've been looking at, and once you've identified, okay, this is the way I think the market's going, now it comes down to finding a trade. Now, for those of you looking at this and say, you know what, I want to be uber aggressive, you could say, okay, you know what, there's more than enough upside to potentially take a trade and actually get involved. Okay, because if you look at it like this area up here is the 136.40 region, which is about 250 pips away, 240 pips away. And if you look at this, for example, okay, price, for those of you who love measured moves and stuff like that, you can see one thing you realize is a lot of technical analysis, a lot of the common technical analysis all lines up. This huge target up here is 240 pips away. Not something necessarily I'd go for on an intraday level. Okay. Another thing you could do is you could say, okay, 134.60. Okay. Now, this is not the 250 pip target away. This is about 65 pips away. And now what we can see now is, let's say like I mentioned before, we've got an aggressive trader that just watches this video straight away and says, you know what, let me just take a buy position from here. I'll try and put my stop loss somewhere below here. Okay, you're looking at about 20 pip stop loss. Okay, and this is potentially a 60 pip target. So immediately, okay, just getting the worst kind of entry possible, which is just from where price is right now, you're looking at potentially 3 to 1. Okay, which is great. That's the bottom. That's the bottom area of the minimum kind of risk that I go for and I recommend my students go for. Okay, is a 3 to 1. So what I'd like to do, and there's a couple of pips below, and I'd say to myself, okay, you know what, I want to find a trade at some point in this particular area. And obviously, the lower I can get this, the lower pip wise my risk becomes, and ultimately that will open up more pips potential. So, for example, let's say I managed to get a trade right here. Okay, what happens when this happens? Well, price is 10 pips closer. So that means instead of a 20 pip stop loss, my stop loss now becomes about 10 to 12 pips. But my target, what happens to it? It becomes 70 pips away. Okay. So now, instead of a 3 to 1, you're looking at about 6 to 1, potentially 7 to 1. And that's not how, when you follow the risk protocols, you're looking at potentially 11, 12% profit. Okay. So I'll leave this yellow line, this yellow area on, and I'll kind of look out and see, okay, what price is going to do. But this is a great, obviously, trade opportunity that I'm going to be looking at and seeing what it does this week on the USD CAD.